Taking a look at oil prices hovering below $70 a barrel today. That's after the aborted coup in Russia added to concerns surrounding geopolitical risks. Now, this comes as the OPEC group of oil producers expects global demand to rise to 110 million barrels per day by 2045. Joining us now is Yahoo Finance's Ines Ferre to give us the details. Hey, Ines.
Hey, Rochelle, that's right. And we are taking a look right now at oil prices. Pretty muted right now. We had seen WTI surge higher earlier, and that has now pared down those gains with WTI futures just down about 0.1%, and Brent crude relatively flat right now. Now, I was able to reach out to Andy Lippo of Lippo Oil Associates to get his thoughts on what happened over the weekend in Russia and what this could mean for the oil markets. He basically said that you can look at this in two ways. Basically, if what happened in Russia, which appears to be short-lived, if this does lead to a civil war, if this is the beginning of the end for Vladimir Putin, then you can expect to see perhaps different areas of Russia wanting to control more of their natural resources, wanting to control more of their pipelines. So you could see a disruption when it comes to the oil markets or oil coming out of Russia. Although there is a contrarian view, which is that if Vladimir Putin continues with his strategy, then he will want to keep funding the war in Ukraine. He will want to also fund his supporters. So you could see more supply of oil coming into the market, and this would be bearish for the oil markets. Of course, the developments in Russia have been really closely watched because we did see what happened with WTI and with Brent crude after the Ukraine war broke out last year. And you can see the price action where you saw WTI hitting $120 a barrel. You saw Brent crude hitting $130 a barrel. Right now, we're looking at WTI just shy of $70 a barrel and Brent at $74 a barrel. The demand coming out of China with its recovery has been lackluster. The data pointing there has not been great. You are seeing commodities, according to one analyst that spoke on Yahoo Finance earlier this morning from Bloomberg Intelligence, basically saying that commodities are in a bear market. And there's not really anything that's going to change that right now because the Fed is continuing with its tighter monetary policy. Rochelle?
So then with so many factors at play, then what does this mean for OPEC's outlook for 2045?
Yeah, so OPEC has come out with its outlook for demand going forward with oil, with the Secretary General of OPEC saying that they're going to see demand rising by 110 million barrels per day by 2045. That's a 23% increase from the current level. And that differs with what the IEA, the International Energy Agency, has said, because the IEA is seeing a slowdown when it comes to demand going forward. And that is because of the transition into electric vehicles, into green energy. Now, what the two do seem to agree on is that Asia is going to really be the catalyst for demand going forward. That would be China, that would be India. But nevertheless, a real divergence when it comes to that. And there is a school of thought that, look, to get to the green energy, you will need to have fossil fuels. You will need more energy in order to get there, in order to produce all the electric vehicles that you want to make, et cetera. But then, of course, the other sort of thesis is that this will eventually lower demand for oil going forward.
Yeah, because those numbers for the oil demand predictions, they're very lofty there, but we'll see what happens. Obviously, a long way till 2045. Thank you for getting us up to speed. Our very own Ines Ferre.